One of the most common trading patterns professional traders like to trade is a market that is short-term oversold and is gapping lower on the market open. This setup can work in a bull or bear market, but the risk is lower in a bull market, and the chance for larger reward is also in a bull market. So if you want to learn more about this trade that I took in Tesla, stick around. Hi, I'm Steve Spencer. I'm a partner at SMB Capital, a proprietary trading firm in Midtown Manhattan where we trade stocks, futures, and options. So the trade that I want to talk about today to you it's a fairly common trading pattern that is taken by professional traders, but I think it's rather uncommon for retail traders. So I thought it would be worth spending a little bit of time going through it. The name for the trade is the flush before the rush. I've probably tweeted that phrase a number of times over the years. It's one of my favorite setups. It can be a short-term, quick scalp trade right on the open, but can sometimes lead actually to a swing long setup. And so, as I mentioned in the intro, it's something that works in all market conditions. Whether it will turn into a larger win and more of a intraday swing setup really depends on market conditions. And so I wanted to walk you through kind of the bigger picture coming into the trade, and then I'll drill down for you to give you ideas of kind of how I approach it and options as to how other traders might approach it as well. One of the most things important to remember is as professional traders, for those of you who are retail traders trying to develop into consistently profitable traders, you do really need to develop your own system for how to enter into a setup and then manage the risk for that setup. And this is really because if you try to just copy what other traders do, it just doesn't work. It pretty much guarantees failure. We all have different risk tolerances in terms of where we want to get into a trade, how we can ride that trade up and manage the risk on it. And so quite often I'll tweet out a setup that I like, but you see I don't really give details about how I'm going to trade it, like, what's my stop, what's my target. Occasionally I'll respond if somebody asks me a question, but I really want, and the way that it works on SMB, which is a teaching desk, is we're training people from the beginning to learn the setups, build their playbook, build out how to approach the trades in their playbook and manage that risk. And it takes quite a bit of time to learn it, but that's really the only way to become successful as a trader. So looking at the first chart here, big picture chart in Tesla. So the big picture in Tesla, if you haven't noticed already, is it's one of the strongest, if not the strongest stocks in the market right now. In the last month, pretty much since they had their shareholder meeting back in May, it's started to bid higher. And, coming into yesterday was up probably around $100 from the 170s, from the 170s to the 270s over the last month. And you can kind of see how it's traded over, the setup basically was it got extended to the upside, had a downtrend day where it failed. Pre-market was up like close to 280. By the time the market opened, I think it was 275, 276, and traded all the way down to, I think, 260 maybe a couple of days ago. So this is the big picture. I also, before we want to get into the smaller time frame chart on Tesla, the market overall, so we're in a bull market right now, right? Like January 9th was the day. I've talked about this, tweeted this a few times since this started in January. But basically, the Qs have been in an uptrend since the second week in January. And you really have got to go, in this chart right here, I've only got it going back, I think, to April. But I've circled, recently, now we're just really in full bull mode, especially in technology. And you're just getting these little kind of 2-day selling. This is a 4-hour chart. And then it just rips higher, then sometimes goes sideways, goes up a little bit, pulls back, rips higher. And then coming into kind of the last couple of days, we had, coinciding with Tesla getting overbought and starting to pull back, we had the market pulling back as well. And just, similar today, you can already see it bounced yesterday. And that's when the trade setup was in Tesla. It's just we're not getting any sort of downside follow through. And, maybe we will next week before the end of the month. But honestly, it's the last week of the month, last week of the quarter. It just seems more likely that managers would be pushing more money in until the end of the quarter, and then maybe we'll get a nice rug pull at the beginning of July. But the backdrop is we're just not getting any sort of consistent rollover in the market. The money is just rotating every once in a while a little bit out of technology into other sectors, and sometimes just within technology. Maybe some money pulls out of Microsoft and goes into NVIDIA, or pulls out of the semis and goes more into Tesla. But just overall, the Qs are just really, really strong. And so that's why this setup, when you do get the downtrend like you got, and we'll take a look at this chart right here. This is the 30-minute going back the last couple of days. We had this gap up in the pre-market to that 278 to 280 area. We opened at 275. I think the high was 276. And we had, a nice down bar on the 30-minute where we got below 270. And like at that point, to me, and I should say that the prior day I was buying puts, putting on bearish butterflies, doing some things for July, for after earnings, for looking for a pullback, a bigger pullback. And so when we started to move lower here on the first bar, I was short, and I just didn't want to see it get back above 272, and I was willing to trade it on the short side back to 260, 265, see if it would have a pullback. And it ended up being pretty weak, closed the day right around 260 in the after hours. So one of the most common things you've seen if you've been trading for a while, when a stock has a down day like this, where it started high, like put in a new high for the year and then closed weak, swing traders look at that as, I think they call it an island reversal or some type of Japanese candlestick. I'm not sure what the exact name is, but where it was going up into the day, was gapping higher, then closed at the low, maybe closed below the prior day's low or something like that. That's generally, from a swing trader's perspective, a bearish candle. And so you maybe had some people in the after hours here kind of chasing it, pushing it down. In the after hours, it dropped like $3 or $4. And I was kind of excited about that because I was thinking to myself, I think I maybe even tweeted this out, that maybe we could get, if we see more selling, I think I tweeted this, if we see more selling tomorrow, maybe we'll get a move down to 250, 252. And from my perspective, then that would be a good opportunity to play it for a bounce. And why would people be looking for a bounce there? The stock has just gone up $100, and it's just the nature of the market that we're in. We're in this bull ramp phase, the opposite of last year, low volatility. And so you have people looking to buy pullbacks. But the other thing that you have in Tesla is you have people piling in on the short side. Probably as soon as it got above 240, you probably had people shorting. Above 250, people probably got more aggressive. And then by the time it's up at 275, 280, people who are shorting lower, they're like in panic mode. And in the next morning, if it gaps down into the 250 area, you're going to get a lot of people buying right on the open to cover some of their shorts. I know I took off a little bit of some of the puts that I had, like 15% maybe or something like that, because I still have till July expiration, mid-July, and then late July, monthly expiration. And so you have people looking to buy pullback long on the stock. You have people who are getting short, over the last $20, $30 on this gap down, let me cover some. And so that can potentially create some buy pressure. And the other thing is what's the magnitude of the move? This thing trades about $10 a day. It's, 280 in the pre-market here on Wednesday, closes down at 260. Then yesterday it's gapping down to 250. That's, it's around 3 ATRs, maybe a little bit less than 3 ATRs. And so that's a big enough move that, you might look for that flush before the rush. And so this is what I tweeted out at 9 in the morning, right before I started the morning meeting, 30 minutes before the market opens, was, you had this run up here, you had this pullback, and then you have this gap into this area here. And, the last time it was down here, it had rolled over from the 265, which was actually the October first gap fill from 2022. It failed there and rolled over to the high 240s and then ripped higher, made a new 2023 high. So anytime you have that situation where you're coming into 250, big whole number, nice big pullback, maybe some stops positioned just below 250, and last time it was below 250, it ripped from 240 right back up to 260, that's a spot to look for the flush before the rush. So here's what happened. Here's the next tweet that I shared after about 15, 20 minutes after the open. Right on the open, you got the flush. Never dropped to 248, boom, popped right back up into the low 250s. And then you had the rush where it went up to 256, whatever. So that's the first 15 minutes. So what I want to do now is I want to drill down because, I always get it was too quick. How would I get in? What happened? Oh my God. It's just, there's nothing I could do. Everything happened so quickly. So what I did was I grabbed a 15-second chart and kind of drilled down for you. And so I can explain to you how I think about it and how other experienced traders look at this as well, because we all trade it a little bit differently. So for myself, what I'm looking to do is, number one, before the market even opens, I'm putting in orders. I'm putting in orders to take off some of the puts that I have. Right on the open, I'm estimating based on where it closed the prior day. If it opens around 250, what can I possibly get for the puts that I own that expire this week, 2 weeks out, etc. And I'm putting in offers where hopefully right on the open I'll get taken, or maybe even get a better print from where I'm offering it out because it opens even higher than the options market opens a little bit higher. The thing that I'm doing with stock is I'm either putting in a script. I have a script for this scenario where it's just going to buy the flush on the open at 3 different price points and have stops based on the ATR, and then have profit targets based on the ATR. But since it was my primary focus, I was just manually looking at it as well. And I have action points for you. So action point number 1 is where I think the stops are going to get triggered and perhaps put in the low for the day. So that's action point 1. I'm not going to buy it at 250 because my thought process is it's going to flush below 250 and perhaps even challenge that low from last week, the 248. So maybe I'll bid for a little bit in front of 249. I'll get a little bit more aggressive in front of 248 because that's the spot where it bounced from last week. And that's what I did. I bid for a little bit here, I got a little bit bigger here. And then action point number 2 is where most traders, I feel like, some traders will definitely do what I do here, but most traders want to actually see it hold that low from last week, and they want to see people start buying it, and then getting a little bit more aggressive and get it back above that 250, that psychological level. So that's action point number 2. Boom, right back above 250. Again, these are 15-second bars. So this was the first 15 seconds where it bottomed at 48. That second 15-second bar, which, by the way, I was able to get some stock, once it bottomed there and closed up here, I was able to throw in a bid. I think it was like at a quarter or something like that, or 30 cents. It got hit here, and then it kind of it failed at 250 initially on that second bar. And then the next 15-second bar is when it went up to I think around 251 or so. When that happens, you can throw it. You can either pay for it above 251, or you can throw in a bid at 250.50, 250 and a quarter with a stop below 249.50. Or if you want to give it all the way to below the low on the open in this bull market, you could do that because there's a better chance that it'll have a bigger move to the upside. In a bear market, I'd probably keep it a little bit tighter. And then action point 3 is once we have about 5 minutes into the open, where we're like, okay, people really actually bought this thing. It's now starting to hold above 252. I can bid, once you see, they're selling it at 254, they're buying it at 252. And 2 things that I'm gathering at this point during this 5-minute period, which is, if this thing gets above 254, this thing might actually fill the gap at 250, 258 to 260. And if it fails, the buyer fails here at 252, my first thought is maybe it'll retest 250 again and put in a higher low. At this point, I'm not thinking, just because of the market we're in, I'm not thinking it's going to roll over 248 and go down to 245 or something like that. More common in a bear market to see that. Certainly it was a possibility, but I would give it a lower probability because of the market conditions right now. But this is a spot, once you see them buying here at 52 and it comes up. And by the way, I should also say, some people, even when they see people selling here at 54, will short it. That's not me. I'm thinking, it's got to go at least another $2 to $3. Like this area here, where it got to around 945, that's about an $8 bounce. It's it's almost an ATR. Maybe that'll fail and it'll come back and do a retest at 254. I don't actually remember what it did yesterday. Maybe it did that or not. But this gives you an idea of the most aggressive way to do it is bid right into the flush on the open. The little bit more conservative way is once it gets back above 250, buy it right there when you have some momentum to the upside, maybe even sell it. As soon as the momentum stops here below 254 and it starts to pull in, and wait for it to have some sort of consolidation. Again, in the first 15 minutes, you really only need it to consolidate for 2-3 minutes. Because time frames are very compressed. You have to make decisions very, very quickly. So the trade is the flush before the rush. The setup is basically something that's pulled back very quickly over a 2-day period where it's had 1 day of selling and then a gap down. Sometimes maybe you'll even have a second day of selling and then a gap down. What you want to have, though, is that gap down. Professional traders, our expectation is that on a gap down, the market makers, The programs, they'll try to create a flush on the open, stop at everybody who has got stops, put in a low right there. You'll be able to trade against that low. And that's really basically the trade. I hope you learned something, and I'll see you next time.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, that's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of SMB Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.